Right, welcome back to Ultralets podcast. I'm here today with Billy Cowell from Smails Goldie. And as you can see, we've both got the corporate winter attire on, not planned.
Same designer shirts at least, isn't
That's
it?
true, yeah. So you have to forgive us for that one. But Billy, really appreciate you coming onto the podcast today and just sharing your story and a bit about what you do and your property investment journey as well, which I'm sure people are interested in.
Yeah, well, thank you for having me. It's good to join you.
Yeah, good. Just to start with then, so how old are you?
That's a good question. 32. That's a think about that for a second then. Yeah, 32 I am.
And you are a partner at Smails Goldie, which is a big, for those who don't know, maybe not in the area, probably one of the leading accountancy firms in the region.
Yeah, biggest independent firm in the region by headcount size. Been in Hull for a long time. And yeah, I like to think that we've got pretty widespread, good reputation across Hull and surrounding areas.
Definitely, that's definitely the case. At 32 to be a partner then is, tell us what a partner is within a accountancy firm. Is it similar to a law firm partner?
Yes, yeah. So I guess technically what a partner is a joint owner. So that all the partners together at Smails Goldie, we own the partnership, we own the group, and
is that shareholding then, is it?
Yeah, effectively. So it's a little bit different to a company shareholder, but it's a similar kind of concept. So jointly we own and operate the partnership. That's kind of the technical side of it. How it works in practice is that we all have our own clients as well. So we all look after our own portfolio of clients, which obviously takes up the majority of our time. But then alongside that, there's also kind of the other side of the role, which is we're trying to run our own business at the same time as well. So we're responsible for strategy, recruitment, marketing, direction, anything like that. So you're kind of trying to balance off the two sides of the client work and everything on that side, but you're also trying to make time for running your own business as a group.
So how's it start then? So you're educated in this area, I'm guessing?
Yeah, so I've been in Hull my whole life, went to school in Hull, and basically kind of, I won't say fell into accountancy. I was always tended to do a little bit better at the maths kind of subjects in school and over English and things like that. So felt like it was a good fit, and didn't want to go to uni, so I applied for accountancy practices jobs at
That's an apprenticeship route then, not
yeah, it was. I didn't go to university, so I did fairly generic A levels, and then started looking into kind of what I wanted to do next a little bit more. Originally, I actually wanted to be a management accountant, which would be an accountant who works in a company, just as they record the accounts for that company. Whereas when I actually looked into it, there's a lot more training opportunities if you work in practice, work in a firm of accountants. So I sent out a few applications to a lot of firms around Hull. I was kind of leaving college, 18 years old, and Smails Goldie were the first people to reply, interview me, and offered me a job before some of the other firms had even got in touch. So even back then, I always knew that Smails had a really good reputation as a training
and
firm.
Proactive in getting you in.
Yeah, really proactive. Like it was a really easy decision for me to go there. I was happy to join. Happy to start my training with them. So that was back in 2010. So I did, rather than going down the degree route, your chartered exams are really the most important thing in accountancy. So I did a qualification AAT first, which some people might have heard of. So that's kind of like a bridging qualification, bridges from your A levels to your chartered exams. Then did chartered exams.
So you are a chartered qualified accountant?
Yeah, qualified accountant.
To do it.
No, if you go to university, you'd need to do your chartered exams afterwards. Obviously, you can get certain exemptions and things, having done a degree, depending on what you study, but you need to do your chartered exams either way. So by going straight into it at 18, you qualify a bit faster, and obviously you do it without taking all the university.
And you get paid along the way.
And you're getting paid along the way. So yeah, I was qualified just after I turned 22, which is a little bit faster than if you went to university route, basically. And we still take on mixed. We take on probably half school leavers, half graduates.
So is that still the case within the company? Obviously, you're not responsible for recruiting those people.
Exactly, yeah. So we've got a lot of trainees. So we took our biggest intake of trainees ever this year. We took 16 trainees on across all of our offices, all 5 offices.
Where are those offices of interest?
So we've got our main offices in Hull, been in Hull, a long time. And we have got 3 offices in North Yorkshire as well now. So they've been part of the group for just coming up to 2 years. So they're Scarborough, Pickering, Kirby Moorside, and then we've had an office over the bridge, kind of North Lincolnshire, for a few as well now. So our core patch is, Hull, East Riding, and up into North Yorkshire. But we have clients all across the country.
And you're recruiting youngsters from all those areas to work with
Yeah,
branches.
exactly. So again, primarily most people are from Hull and surrounding areas, same as I was, all those years ago. It sounds like a long time, doesn't it, when you say it like that? But all those years ago, and yeah, we take big amount of trainees. We do have, I think we've got about 50 plus people at different levels of their training across all of our
Just
offices.
trainees.
Yeah, some of them will be very close to qualifying, and some of them will have just started the journey with us this year. But yeah, about 50 people overall. So
What's
we've
the
always
retention
had
like then? Do you find that a lot of people, when they've been trained, they decide to stay at Smales, or do you get people moving on a
the
lot?
retention. I mean, part of the model is that you obviously recruit a lot of people, and then naturally,
Yeah.
both people will move into industry. Is quite a typical path. Or some people will decide to go into slightly different career routes and things like that. So you will have an element of people not staying with you. But I think we do better than most firms, I would say, in terms of retaining our trainees. Saying that, I actually, when I qualified, so going back to when I was 22, I guess that was the first time that I'd really started to think about what I wanted the rest of my career to look like. Because up until that point, I'd just been focused on my exams and getting qualified. So at that point, I'd always lived in Hull. I'd always, first job in Hull, went to school in Hull, all that kind of stuff. Felt like I maybe wanted to go and work in a bigger city, go and work abroad or something like that. So I actually left Smales Goldie shortly after qualifying.
Right.
Went to work at a national firm who had an office in Hull at the time. I felt like that would give me more opportunities to move
to get to London or to get to Manchester.
move to a bigger city or go on a secondment abroad or something like that. Obviously, it didn't quite work out that way. And
why was that then? Just you didn't fancy it
so
anymore?
within a few months of working at this national firm, I quite quickly realized that I just didn't like that environment as much. I didn't like that corporate kind of culture of not feeling like I could make a difference. And I don't mean that in like a cheesy way, but you were restricted to just one area of work. I didn't feel like I got the variety that I had at Smales previously. And the kind of clients that you work on are very different as well. So you're working on big multinational PLCs, and I much prefer kind of working with own managed businesses and family owned businesses and that kind of stuff. So
it's a bit faceless, isn't it? Do you think? Just personal.
it was a really valuable experience. I still spent 2 years working there. I knew that I wanted to make the experience worthwhile.
Yeah.
I did get quite a few chances to travel as well. So I spent some time working in Ireland, spent some time working in America. Which is, that time of your life, it's really a good time to do that kind of work, isn't it?
Where else in America was that?
With a few places actually. It was mostly in the Northeast.
Right.
So we worked kind of like Pittsburgh, did a few kind of like trips to New York on the way to and from.
Brilliant.
And then kind of that down in north, it'd be like Florida area around there. So yeah, a few trips, go for like a few weeks at a time type thing for some clients. So that was really, really good fun at that point. But I knew that ultimately I didn't want to stay in that kind of environment, that kind of firm longer term. So once in 2 years, we were obviously met a lot of really good people along the way, and don't regret kind of making that move. But equally, I was very keen to
You're
come
pushing
back.
your comfort zone when you do stuff like that as well, especially at that age, because it's very cushy to get yourself bedded in a local firm and be there long term. But I guess you just want to see what you can and tell yourself that you can do it, and you pick up loads of skills, I bet.
Exactly, and a lot of that experience has been really valuable having then come back to Smales Goldie. So when I left originally, I was quite careful to leave on, best possible terms. I always knew that it was, a firm that I'd really enjoyed working at. It was not kind of off the cards that I would maybe go back one day. So went back kind of 2 years later with a lot more clarity on kind of two things really. One was a better idea of the type of work I wanted to do, or the variety of work that I wanted. I enjoyed having different elements, doing the core accountancy work, but also getting involved in tax, getting involved in business advisory stuff, getting involved in kind of longer term planning, which I felt like I'd missed that when I was away. And
so when you were away, you were doing more management counts?
No, it was more pure audit, really.
Right, okay.
Yeah, so just the auditing. We worked on, FTSE 100 companies looking at their annual accounts, basically, which is just like a year-round process in some ways because they're such big companies, which was really interesting at the time. But I just felt like I enjoyed the variety of having the other bits to go alongside that. That was the key thing for me. And then the type of clients was the other one. So having the owner managed businesses and actually getting to get to know people as well as get to know their business.
Which you have a lot more being.
Way more at Smales. That is our core client base, our managed companies typically. So much prefer kind of working with people like that. I feel like you get to build relationships on a deeper level, and you get quite a lot more. Thanks is the right word, but thanks and appreciation when you're dealing with someone on more of a personal level, and I think I definitely get a lot more, um, satisfaction out of working with the kind of clients more than anything. So that was the first bit. The second bit, having come back, was going way back. I did have kind of ideas, and I always liked the idea of running my own business.
Right.
Obviously, I deal with people all the time at work now who set up their own business. I've got huge respect for, same as you have, got huge respect for people like you who set up their own business and taken that risk. The problem I had is I never had any good enough ideas. That was a problem.
Really? Sometimes you don't have to reinvent the wheel. You just got to do it better than everybody else.
Do better than other people. So, having come back to Smales after the 2 years away, I started thinking for the first time seriously about being a partner and what that meant. Had a few conversations, and I felt like it gave me a really good kind of balance of being able to do the client work with the type of clients that I enjoy, but then also having exposure to those different parts of running your own business as well, and being responsible for the overall direction.
So would you say now that given those two parts of the job that you've got the core accountancy type work where you're working on people's businesses, and you've got the running of Smells Goldie itself, would you say that the running of the business is something you prefer or enjoy more?
I wouldn't say prefer. I would always want both elements of it, because I enjoy spending time with clients a lot. That's probably one of my favorite parts of the job, is going out and actually speaking with people about their issues and how we can help them, and speaking about their businesses. But equally, I like spending time on our own business as well, and helping the 50 trainees that I mentioned earlier, helping them on their journeys.
Rewarding, isn't it?
Yeah, exactly. And helping drive the future strategy and everything else that we spend time kind of discussing as a group. So I would never want just one without the other. To kind of that have to come as a pair, and I think that's why I've kind of enjoyed the job so much so far.
Good. No, it's an interesting journey, actually. That I didn't realize. One of my questions was to ask you about whether you'd ever considered going abroad and doing something, but
didn't quite make it out of full.
Yeah, well, there must be a bit of a personal drawback as well to the area. I guess a lot of people I know from friends of mine who've gone away to university and got jobs in other cities, and they've always sort of thought, you know what, there's a lot of good things about being in Hull, and I'm familiar with it. The cost of living's cheaper, my money goes further. There's some more personal elements to the drawback as well, I guess.
Definitely, it's something we have to kind of battle with. But that retention point that you mentioned at the beginning. When people get to the end of their training, there's always potentially that draw of Leeds, Manchester, London, and some people choose that that's the right step for them, and they'll relocate. And other people are very happy with Hull. They've got their lives are in Hull, and they see that they've got the opportunities within the firm to kind of grow. So why would you take that risk and move to
especially in a big firm like Smells? I guess.
Yeah, because we have.
Sky's the limit, isn't it?
Exactly, yeah. So we've got 50 plus trainees. We're about 160 people total. Right. So obviously there's, even beyond that traineeship, there's quite a lot of opportunities to then grow and develop careers within the firm. The majority of our partners are internally trained as well, which I guess kind of speaks to the quality of trainees that we're bringing through. And I've got a lot of really good trainees at the moment, so I'm sure that we'll be.
Well, you're doing well to keep a lot of people as well.
Yeah, we'll be, battling hard to keep them on their journey as well for as long as we can.
Good. Moving on to sort of property type stuff.
Yeah.
We actually had a meeting, I think it's probably about 6 months ago now. And one of the first things you said to me in the meeting was, how's it gone with the Riverside takeover, which was a business that we bought in February? I said, oh, right, you know about that, do you? He said, well, yeah, I've joined you as part of the takeover.
I said,
now. I think, apologies, I should probably know that, but no offense taken that you didn't choose us in the first place. But firstly, what properties have you got? How did you get into that?
Yeah.
Can you share?
So just the one property. Right. So it's one that I lived in town for a while, and really enjoyed that time of my life as well. Really convenient when I was obviously super close to being at work, maybe too close sometimes. But then the social side that comes with living in town was
really
roll
out of bed into the bars.
Pretty much. And when we moved, my now wife, we moved to a house a few years ago, about 5 years ago, and chose to keep the flat.
It's almost an accidental landlord.
Yeah, basically. I'm sure you probably see quite a few stories similar to that. That's how people get into it. So we've had the flat as a rental, as an investment property for about 5 years now. And I wouldn't say it's all been plain sailing. There's been challenges, as there always is with property, but on the whole, it's definitely made it. It's had some benefits for my work life, I would say, as well, because then when I'm speaking with people about properties that
Yeah,
they own, I've got some kind of relevant experience that I can draw on.
yeah. It's always useful to have that first-hand knowledge of
Definitely.
things, isn't it?
Yeah.
Is that something you think you'll expand into in the future? Have you got an appetite for buying more potentially?
Potentially more in the future. Nothing in the short term. I don't think we're happy with the one that. I think if I could go back, the one thing I would say is that the flat was brilliant for living in, for sure. I think as an investment property, I would probably wish it was a house.
Right, yeah.
I think there's a few more challenges with.
Is it a leasehold?
It's a leasehold, yeah. So that brings with it. There's a few things that are just out of your control that can be a bit
And
frustrating
the
at
margins are a bit
times.
tighter because you're paying that big service charge.
Yeah, service charge, ground rent, a lot of leasehold reform over the last few years as well, which is obviously something that's kind of relevant to people who are flat. So, if I could click my fingers and probably turn into a house 5 years ago, maybe I would have done. I think that's where we would go in the future if we do decide to take on any more.
So how's it actually been since you moved across to us then, since the Riverside takeover?
Yes, I can't believe it was back in February, to be honest. It feels like it's been, not even that long
Time
ago,
flies,
really.
doesn't it?
Yeah, it does fly by. The transition itself was, absolutely fine. I mean this in a positive way. Like we had barely anything to do with it. We had the correspondence signed up on your website, on the portal. It didn't really take much involvement, which is exactly what you want when you move into an
Paying
agent.
for it to be managed, that is.
Yeah, exactly. And then since then, we never had any problems with our old agent. Absolutely fine. But the biggest difference I've noticed so far dealing with Ultralets is just the proactivity within the team. So, within a few months of coming across to you guys, someone got in touch and said, do you want us to carry out a rent review? We'll make a comparison against what we believe the market rent is. It's particularly important at the moment, the way things have been. The rent market is so fast moving these last 12 months. So we were more than happy to let them go away and do that research for us. They came back a few days later and said that we think you could be charging, £50 more. Obviously, we're better off and you guys are better off as well because you're getting proportion of a bigger rent. So we were really happy to get that level of support. And, I think that's something that was completely kind of new to the agent experience for us.
Good. So I know Smails typically work with trading businesses of sort of a bigger size as well, not so much the smaller companies. Does that same rule apply for landlords? Do you work with property investors?
We have a huge amount of different property clients is how I would describe it. So we've got, some clients where we are looking after that core kind of tax compliance, annual tax return for people who hold, 1, 2, 3 rental properties. It might be that we already act for them in another capacity. It might be that we already act for them for some of their business interests, for example. And they just happen to have some rental properties as well that we kind of we manage as part of the overall service to them in terms of the tax side, that is. We'll then have some, properties some companies that are, dedicated property companies, so development companies, building companies.
Bigger scale stuff.
Well, more like in the medium type space, I would say, who might have a larger portfolio of properties that they've retained or purchased over the years. So that's when you start looking at, the structure of those kind of businesses is probably a bit more of a relevant conversation when they get into a bigger size. And then at the, the very highest level, our biggest clients, we've got huge property companies with, really significant mixed use, residential, retail, commercial type space.
Are these national companies then, or is it predominantly local companies?
The local, originally were set up as local companies kind of based around Yorkshire, but they've got properties all over the company. But, for those really big ones, you're talking companies with assets in the tens of millions.
Yeah.
So we do cover a really huge range. And obviously all those clients need different kinds of services and different kinds of support.
Yeah. Landlords are asking me accountancy related questions all the time, and I wish I had all the knowledge to give to them. One of the biggest questions I get asked is about ownership of property within limited company or in personal names. It's Section 24, was it?
Yeah,
It changed a few years back now.
It did, yeah.
Which said that you were no longer able to offset the interest element of a mortgage if you owned it in your own name, but you could in a limited company.
Yeah, so it's you can still offset an element of it when you own it personally, but it's now restricted to only 20% basic rate relief. So
if somebody's a high rate payer,
if you were, pre-Section 24, if you were a higher rate taxpayer, you would have got relief on all of your interest costs at 40%.
Right.
Whereas now that element, just the interest relief, you still get deductions for your other costs, so things like your agent fees, insurance, that kind of stuff is treated separately. But the interest relief is restricted to 20%, which can make a really significant difference.
Massive difference.
And has been even more important over the last 12 months as we've seen, obviously, significant changes in interest products.
Yeah.
mortgage cost, mortgage
Because
rates.
it's now one of probably the most significant part of the ownership of a property is the interest you're paying to the bank, cost-wise. So if you're not able to offset that,
you can only offset half of what you could do previously. You are seeing quite a big impact, basically. So it's a conversation we have, for the last few years. It's been a conversation we've had with a lot of our property clients, and it's something that's becoming kind of even more relevant now because of the way things are going with interest costs. Generally speaking, and that is a big disclaimer there. So generally speaking, because it is really important to get kind of specific advice for your individual situation. If you're a higher rate taxpayer and you have more than just a few properties, just one or two, it's worth considering operating through a corporate structure. If you're basic rate taxpayer, if you've only got a few properties, the admin burden that comes with running a company is probably not worth it. And if you basic rate, it's definitely not worth not really losing out on the relief. But
thing is, if you've got an income from a job and then also 2 or 3 properties, it's not difficult to hit that.
Yeah, which will be,
rate,
a lot of people do operate like that, don't they? A lot of people have these as, extra company supplementary income, and they'll have a job or a business or something that uses all the basic rate band anyway. So automatically, you are in that higher rate issue. So if you've only got 1 or 2, I would probably think it's the admin cost would prohibitive to move into.
By admin costs, you mean obviously you've got the cost of filing limited company accounts every year, which is minimum, probably depending on an accountancy firm, £1,000 a year, I would say.
Yeah, pretty much for all of your admin costs. Obviously, you've got tax returns as well. So by the time you've done a set of accounts and then the tax return submitted that, you're easily looking in that kind of ballpark.
Not only that, but you've got to potentially sell the properties from your own personal name into a limited company structure, which stamp duty then applies.
Yeah, so that's where you can get quite complicated. So if you own properties personally and you want to try and transfer them, it's really important to advise in that situation because you can leave yourself in some quite difficult situations where you can end up with, tax bills with obviously no proceeds coming in because you've not actually sold the properties to a third party. So just being really careful on historic stuff is probably my biggest piece of advice on people thinking about corporate structures. Obviously going forward, there's a little bit more flexibility. New properties could acquire through a corporate.
So if your intention is to build a big portfolio, maybe over time, you might have 1 or 2 in your own name now. You maybe want to get 10, 15, 20 into the future. It's probably best to get that corporate structure set up.
Yeah. I'd definitely worth considering is what I would say. Yeah. If you've got ambitions to grow a big portfolio and you're going to be in that kind of higher tax bracket as well, it's definitely a conversation that's worth having because you could see quite significant benefit because you would get full deduction. The real benefit, obviously, we spoke about kind of the downsides of having a company there, the admin and the time cost that comes with it. But there are a lot of benefits as well. Obviously, the interest one is the obvious because you get full deduction of all your interest costs within the corporate. The other side is the flexibility. So if you're an individual, say you have £50,000 worth of rental profits, all of that gets taxed in the year that it relates to. If you have £50,000 worth of profit in a corporate, obviously the company pays corporation tax on that first, but that'll be a lower rate compared to what your higher rate or additional rate would be. But then you have a level of flexibility, what you then take out after that.
You get dividend allowances.
Yeah, dividend allowances that you can utilize. It is quite small, but it's still worth, it's worth utilizing. Rates on dividends are slightly cheaper still than income tax rates on salary and things like that. So, dividends can be preferable, but the main thing is having the flexibility to be kind of smart with your income tax bands. So utilizing full basic rate bands, full higher rate bands, that kind of stuff. And having a company does give you the flexibility on what you actually take out and when you take it out. So that's the other benefit alongside the interest point.
I guess if you've got a low rate corporation tax being paid in the company as well, that means you leaving more liquid funds in that business if you're trying to grow it.
Yep.
The cash flow is going to be a bit better for further acquisition. So if you've no intention of actually pulling money out of that company anytime soon, that can be of a benefit as well.
Yeah, exactly. So you can, all those things you can kind of factor in to decide what you take out when. You've got future acquisitions coming up. You can leave that in the company, then you don't have to suffer the dividend tax when it comes out because you can leave it there for future acquisitions.
Yeah. Okay. So Smells in general, then, do you look for active new clients within the property space? Are you looking for bigger customers or what's the?
I think we're always interested in speaking to new businesses. Always happy to have conversations with people. I wouldn't say something that we're massively targeting in particular. We're in a quite fortunate position where we do get a lot of referrals. We are quite well known locally, so people will generally come and find us. And we're always grateful for the referrals that we get from the other advisors, legal professionals, agents, things like that, who will point people in our direction. We're always happy to have a chat with someone, even if that doesn't
come to anything.
come to anything. If it's a Teams call or phone call. Or
The thing is, you never know what people have got in the background either. They might have a couple of properties and come
You've
for
got
a
to take
chat.
a longer term view with these things as well, because someone could be at the very early stage. We spoke about the variety of clients that we deal with. Someone who previously might have been a relatively small, had a few properties in Madrid tax return. A few years down the line, they could have quite a big business that's got multiple properties. They started looking at developments. Or
there could be a big trading business in the background that's funding the property investment. That
as well. Always happy. It's the way we've always operated. We're always, not just property clients. We're always happy to speak to people about any questions they might have.
Good. I really, really appreciate you coming on, Billy, today and sharing your story and a bit about Smails as well and what you guys can do for our customers and anybody else out there. So many thanks for coming on.
Thank you for having me. It's been good.
Cheers.